US President Joe Biden is going to propose changes in the taxation of cryptocurrency transactions, reports the Wall Street Journal, citing the draft budget for fiscal year 2024. Reports Foreclog.com. The head of state expect that it would increase budget revenues from the industry to $24 billion. A White House spokesman confirmed to Quindex that the proposed regulation should reduce sham deals. The scheme involves the loss-making sale cryptocurrencies to lock in losses that are not subject to further taxation. Investor redeems a similar amount of assets. U.S. law prohibits such manipulation of stocks and bonds. If the proposal is approved, many cryptocurrency owners who entered this space after market peaks 2021 would suffer huge losses, said Cohenly spokesman Danny Teller. Noted Biden's innovation touches on various areas. In particular, he talks about doubling the tax on capital gains for those who earning $1 million or more to 39.6%, also announced the need for increased deductions to the state budget by oil and gas companies is expected over the next decade. These proposals should reduce the budget deficit by nearly $3 trillion before the signing of the president's draft budget will undergo review and approval by members of the House and Senate. Recall at the end of January, the White House urged the U.S. Congress to theorize on oversight of the digital. In February, the Fed warned banks of the risks associated with crypto's liquidity. Added as Beats wrote Media, the chairman of the commission under the trading U.S. commodity futures growth, Ben believes that Ether and stablecoin should be regulated by that agency because they fall under the category of commodities. At a recent Senate hearing on agriculture issues, Senator Julie Brand questioned Rostin Benham about the different views of the CFTC and the U.S. Securities and Exchange Commission on the regulation of cryptocurrencies. In this, answered that it is the CFTC that has the authority to regulate stablecoin and not the CSI, which has recently begun to put pressure. Paxos issuer BSD Ben also mentioned the settlement of the lawsuit Tether in 2021. According to him, CFTC's enforcement department was immediately clear that the staple coin pegged to the US dollar is a commodity. The chairman of the CFC added that he would not allow the launch of futures on Ether if he wasn't firmly sure that Ether is a commodity. If the regulator completes any action without serious legal justification to support its arguments, the credibility of it could be violated by noted ban. A few months ago, Ben said that only Bitcoin can be considered a commodity, even though he had previously stated that this is the same category as Ether. Ben's recent comments go against the statements of the chairman of Syria Gensler, who referred to all crypto assets except for Bitcoin as securities. The statement has been criticized by many cryptocurrency lawyers. Different points of views of regulators could delay the creation of a regulatory framework for regulation of cryptocurrencies because each agency is trying to establish their own control over the industry. I'll say goodbye to you channel by clicking on the bell and be sure to leave a comment below of the video.